Hello. How's everybody doing? Welcome, guys. So this is what we're going to do. We're going to go through all the charts relatively quickly. Don't want to keep it too long. I'll try and keep it closer to 30 minutes. In the past, I've run over. I'm going to go through a little bit faster now. So what we're going to do is we're going to look at the US dollar quickly by looking at the majors. So we're going to look to see if there's any common signal from the dollar within euro dollar, GBP dollar, dollar yen, and so on. We're looking for either dollar strength or dollar weakness, if there's any clarity in the coming week. We're also going to then have a look at crude oil, gold, and then the indices. So if you had a list, it's going to look something like this. Okay, that's the main list. So the first thing we're going to do, run through the dollars here to get a sense of the dollar. Why are we doing that? Because the dollar is the biggest cog in the system. It's not just against currencies. Stocks are quoted in dollars. Commodities are quoted in dollars. Everything is quoted in dollars. So we're going to check that first. Then we're going to have a look at crude oil, silver, and then we'll look at the indices, and then we'll see how that goes. We'll then have a look at the euro pairs, the pound pairs, Aussie pairs, and so on. Okay, so very quickly, let's start off with euro dollar. All right, so what do we know so far? We know that if we look at it from a monthly perspective, we can see we've broken through some massive resistance levels here. Very strong resistance. We're now heading towards the next key level, which is around about kind of close to where we are. And if we break through that, we're going to see euro dollar head up towards 1.16. So if we have a look at it from a weekly perspective, we have an inside candle here. I call this a potential pause and go. I say that sometimes you get a move, then you get a bit of a pause, and then you go again. So we could be getting another one of those. I'm not saying we will for sure. I'm saying that we have to see how this level goes. Okay, so we have to see how the level of resistance holds. If it does, if you want to adjust it down, bring it down to, there we go, 1.1425, for example. Excuse me. And so basically this week, I'm looking to see if we get a breakout. We do appear to be forming possibly a small ascending triangle. So we're going to have to see how that goes. We could get a breakout, and that's where I would expect the market to go to. So that's really what we're looking for here. Right now, we have a weak US dollar. The only question is whether it's, is it a little bit overextended? Does it need a bit of a pullback? That's the tricky part. So if we go look at GBP USD as well, you can see looking at this now, it just continues to move very, very strong. And so again, a weaker dollar. We can see here from GBP USD, we have an uptrend on the weekly. And if we look from a monthly perspective, we could see we're heading up towards these highs up here. So again, for now, it leans more towards a weaker US dollar, which means that we could see some good opportunities on the majors against the dollar. Let's have a look at Aussie dollar, US dollar. This is significant because I think right now we have this very strong bullish candle off a level of support. So the implication again here so far is that we're going to see it continue to move up into these levels. So this also hints at a weaker dollar. And again, is sitting right at a critical level of support and resistance. We could see market touching here for support, touching here for resistance. So if we break through that, it then becomes more likely we're going to see moves to the upside. So from a daily perspective, we'd have to break through this. This is the specific level I'll be watching will be 0.6393. I want to see us break and close above that. We're not there yet. You can also see, which is not necessarily a sign of strength, although we have relatively flat level here, we have got bearish divergence there. So it's possible we could see a failure to break through there, and we could see the market pull back a bit. Okay, so just showing you that. Kiwi dollar, US dollar managed to break up. This looks very good. I like the look of this one specifically. Ladies and gentlemen, I teach you this in my classes. You know this stuff. Bullish divergence. We can see here we've broken through the highs. So we can see that there's much more bullish momentum than bearish momentum. But also at some point we need to see a bit of a pullback. So we need to see a little bit of a pullback here and looking to go long. So for me, any kind of pullbacks on the daily against this, I would still be expecting a weaker dollar for now. So for me, any kind of pullbacks, I'd be looking for potential long opportunities, buy opportunities to the upside. Let's have a look at dollar Swissy. So dollar Swissy is very overextended. At some point, it would be nice to see this come back to the moving averages and continue down. But again, the momentum is very bearish. So what does that mean? It just means that, yes, that dollar is weak and dollar Swissy does want to go lower, but also it could really benefit from a little bit of a pullback to let off some of that steam. The other thing I would add here is it did break through. This has been range bound for a very long time, going back to 2023. So almost a year precisely. We've broken outside of that range. So unless for some reason it comes back into the range, I would expect this to continue to head lower. So dollar Swissy now looking like we're back down below these lows. The last time we were here was 2010, 2011, when the Swiss intervened. So the Swiss franc is getting very, very strong. And I think we should pay attention to that. I think you should keep an ear out for any news from the SNB, the Swiss National Bank, any talk of possible intervention. Just listen to see if they're concerned about the strength of the Swiss franc. If you hear that, just be very careful. But just listen out for it, okay? If you're not hearing anything about that, that's a good sign, okay? Because they intervened in the past and it was very messy. Okay, so we're seeing weaker dollar there. The only concern I really have isn't so much that it's a weaker dollar, it's that it's overextended and it needs to pull back a bit. Dollar CAD. Okay, so dollar CAD in a very interesting place here. So first of all, it had met some historical resistance. All right, has an uptrend. There's no doubt it has an uptrend. This is where it gets interesting. It's pulled back into a level of resistance and a possible area of support. So we could, it's possible, see it recover here this week and see it start to push higher. That is a possibility. But if that dollar truly is going to weaken, if it truly is going to weaken, I would expect us to fall through here. And if we break below this low here, that is very significant. That means this uptrend is finished, it's broken, it's done. So I'll be watching these key levels here and saying, look, if we do fall through this and we break that low and we really do break it down towards here, then I think we can probably assume that that dollar is going to continue to weaken and dollar CAD has lost its uptrend. So I'll be watching that as well. So you can see a lot of these charts, guys, are sitting at close to key levels. And so this week, I want to see if they manage to keep going through those levels in line with a weaker US dollar, or if they manage to reject them. So in other words, do we get a temporary strengthening of the dollar for a few weeks before it goes back into it? So in other words, now we're talking sort of weekly / not just daily. Okay, so if they break through, they're going to keep going down. And that would happen in a situation where the dollar weakening is quite extreme. So in other words, what we're seeing now, guys, is we're not seeing normal types of breathing in and breathing out of the markets. We haven't actually seen that since September last year. We're seeing the market go well beyond where it's supposed to do and then swing all the way back. So in other words, you have to understand that, for example, now, if this was a year ago, I would have said, you know what, I'm expecting this to have a pullback. I expect it to come back in here or come back into one of these levels, and I'm expecting it to carry on down. That's what I would expect. But because of the extreme conditions, market conditions we're in now, of which we've not really experienced them in 100 years, I'm referring now to extreme tariffs, but also alienating allies. Like we've also, in a highly volatile global period, this is not common. So anyone who tells you that, well, stocks always have a correction and this is just another one of those times, this is not just another one of those times. This kind of thing hasn't really happened so much in our lifetime. So we need to be aware of that. And the last time tariffs like this were imposed, we had the 1929 stock crash, which led to a global depression. So if someone wants to use and say, well, this has happened before, you need to point them to that one. Okay, so normally I'd say that. But if we are in an unusual situation, the dollar could normally continue to weaken. So what I mean is it's already overextended, but it could keep going. So just keep that in mind. Just be open to the possibility that the markets could now become, where they become very likely they're gonna behave a certain way. They could break that rule, and it's not because the rules never apply. It's just because we're living in strange times. Dollar Sing. Okay, so we've broken through this level of support. Again, I'd be happy to see any kind of a pullback here and a continuation down. I think it's more likely we'll see the dollar continue to weaken rather than somehow become a pillar of strength again. It's not impossible, but I think it's the least likely outcome. There appears now to be a little bit more of a concerns about the security of the US dollar than we've had in many, many, many years. And it looks as though there's a movement towards offloading the dollar. And so that's why I say we would expect it. I can't really see that sentiment being changed. Suddenly everyone going, okay, we think the US economy is the strongest in the world again. I think there's concerns now that it's only been like this for a couple of weeks and it's already taking a hit. Therefore, we need to wait to see how much worse it's going to get or what's going to happen. There's just too much uncertainty. Dollar yen. This trend looks really good, guys. The only thing I would do is watch these key levels. With yen pairs, you tend to get bounces at those key levels. We are overextended. Okay, the momentum is bearish. So look here. You've got a nice downtrend. Here we're producing lower lows, lower highs. This is, nice and bearish. So we are, it looks good. But any kind of a pullback, again, it's at a key level. So guys, when it's at a situation like this, you need to either wait for it to pull back, take the trade back to that key level, or wait for it to break through, possibly, and wait for it to come back to the level. So in both cases, you're kind of waiting for a bit of a pullback, either a breakthrough and a pullback. So you're either waiting for it to come back into here and then carry on down. So there could be a short-term trading opportunity here, or it breaks through, you wait for it to come back so that you can do that. Does that make sense, guys? But for now, the direction seems to be pretty clear as to which way it's going. Okay, let's look at crude oil. If you've been sort of following me, you would know we've been watching this for a while. I'm not following everyone else, like Chloe and Simon and everyone. So chances are they've also pointed this out because they're all good at what they do. But yeah, we've broken through a key level here, quite significant. This downtrend is intact. MACD looks relatively flat. Right now, I would expect this to still, I really want to see how it finds out, how it tests this resistance level. And if it finds resistance, I think we can expect it to go back. I know that's a very bullish candle. If we look, it's also kind of bullish here. But this week, I think, is quite important. If we start to find some resistance in these areas and come back down and close lower before the end of the month, the implication is we've now broken through and we're going to keep going. Right now, it's relatively flat here, so it's not really necessarily bullishly divergent. It's been building up for a while. And again, aside from a couple of tricks here and there, I can't really see oil coming back in demand, considering the growth in EV stuff. Now, crude oil is not just used in cars, okay? It's used on so many other things. It's used in so many other processes. But I think I still just can't really see it somehow coming back in demand. I think overall, aside from the oil industry, most people are very keen to move away from this. Okay. Let's have a look at gold. So I said it before, I said it a while ago, gold was, so let me explain my analysis. So first of all, gold broke through a key level, okay? Broke through a key level, all-time highs, broke through this. And then it started to get to about here. So I was watching it when it got to this period. Showed a little bit of exhaustion. What I was expecting, which was not unreasonable, was for price to come back to this key level, find support, and keep going. It then produced a second candle like this, and then ultimately a third candle like that. So I was still expecting it to come back because that's not, again, the price action was stalling. And so I don't think it was alone in that thinking. Anyway, so then the market pushes on. And I think it was around about here. I think it was around about that candle. I went, okay, we might be in a bit of a bubble. And the only reason I said that was because the distance, the move from this low to there matches the last time gold was in a bubble. It was like, that's the kind of distance it moved. It was quite big. And then I said, look, if it is a bubble, it's just going to keep going. And it's interesting because then it got to this part here. And actually what it did was it formed a wedge. So it formed a wedge like this and then broke out. So it was already potentially in a little bit of a bubble in this area. Then it did this and then it kept going. So it's definitely in a bubble. There's no doubt that it's in a bubble. It's never traveled so far in my lifetime. And, it's already well beyond that. It's broken through. It's gone from, breaking out to 1900 all the way to 3,300 within, a couple of years, a few years. And the candles are getting bigger. I want you to please take note of this. Notice the size of the candles here versus the size of these candles here. They're much, much, much bigger. So that can often be in the last part of the candle, the market's movements. But I want to just say something here. It's impossible now to really predict ahead of time where gold is going to stall. What I mean by that is we're looking at on a monthly basis. And for now, the candle's getting bigger. So, and they could continue. You could get a big one like this and a big one like this. It could really, really keep going. Plus, I think part of the bubble is coming from all of the uncertainty. It's not just that. It's, gold is used for so many things. It's used during times of uncertainty. So people are moving away from the dollar but towards gold, which so far makes sense. But also, China and Russia are buying gold like crazy. So we can see a lot of that happening. So right now, guys, I am not going to say where gold is going to run out of steam. Yes, part of it is also, thank you very much, part of it is also because the dollar is weakening, but that's one of many factors. Gold right now is definitely attractive for lots of different reasons, yeah. So the dollar weakening is helping it, yes. But here's the thing, guys. For now, this is an amazing learning lesson. You're living during historical times because you're seeing stuff. We're not our best traders when we learn when times are good. That's when, you just think that's how the market works and it can never behave unpredictably and it's more predictable. That's how you produce people who make money for 10 years and then lose it all. If you learn when times are unpredictable, then when times get good, it's easier making money, but you're also prepared for when the market changes its behavior. So it's good for you to learn now. So here's what I'm going to do with regards to gold. I'm not going to presume to think where it's going to turn around. I'm not going to presume to think that it could go up to here, to here, to here. I'm not going to presume to think that it can't go further. This is one of those moments where you should just not anticipate, but just watch. However, so in other words, until I see signs of it, I'm just going to continue to look for buying opportunities. That doesn't mean you won't have losing trades. There could be we can have losing trades because it does a 4-hour correction, but then keeps going. Like we can have losing trades for various reasons, but we could be right about the direction. But what will I be looking for? So what will show me will be signs like this. On the daily, for example, we will start to see more and more divergence, and on the weekly. So both time frames will start to show this. They'll start to show more and more and more of that, while the market starts to go up, and it will start producing more candles like this. And I think it's going to be something that's going to take a few weeks, possibly, maybe even a few months. So it's not like you guys, have to worry about it happening this week. It's going to take a while for it to run out of steam because it's in a bubble. Okay. When I say that, I mean, a bubble can burst. Sure. It's possible something could happen. A gold could suddenly tank in a day. That's possible. But that's very, very rare. It's usually you can see the signs of exhaustion, even with the 2007, 2008, 2009 global financial crisis. You could see the divergence creeping in, and then eventually it fell through the floor. We're not seeing that now. We're not seeing it now. So I don't think we're anywhere near the end of gold just yet. And I haven't been following the other guys, but I would love to know their opinion. And there is actually a group. There's a Telegram group or something. I could just ask the guys what's their take on gold. But this would be my take on it. We'll see it. If it's going to start to fail, you'll see more red candles showing up. You'll see it start to lose its trend. So right now it's got this beautiful trend. It's very kind of rhythmic. You'll see it start to kind of get a little bit, you'll start to break down, and then eventually, and you'll see divergence, and then you'll see it on the weekly, not just the daily. You'll see it start to fall apart. Okay. For now, I think it's also connected to, as long as the markets are uncertain, I think gold is probably going to be a safe haven thing. It's not even an inflation thing now, but inflation is coming. So now gold is possibly also going to act as a hedge against inflation. So we're in a bubble for gold. The bubble is there until it bursts, and that could be years from now. Like it could be what I mean by it could be a year from now or 2 years from now. It doesn't just have to be a few months from now. Okay, but cautiously. So it means that I'll be bullish on it. I'll trade it, but maybe not at full 1% risk, maybe 0.5%. Cautiously, I'll make sure I take some profit. And this is more to do with trading rather than investing. Okay. For me, investing with gold, I'm a little bit concerned now because I think it's too expensive, but that's a personal choice. That's not my advice to you guys. For me, when I look at gold, I would rather buy it kind of when it comes back to here, if it does come back. Is it possible that it could come back to there? Of course it's possible, because I was here when this happened. I was around when gold did its first bubble up here and came back almost. It broke through. Let me show you how much it corrected. That was $1,000, and it came down to $1,050. So it broke through and came almost all the way back. So could it come almost all the way back here? Yes, it could. Also, it's gone parabolic. So what does parabolic mean? Parabolic means when it does this and it starts curving up like that. You can see it. You can see it kind of goes like this, then it had a reset, and now it's just like that. So this is 100% bubble territory. When it comes back, if it does, it could be quite a strong correction. Now, during this period, people like gold's never coming back down. Just like during the 2008, 2009 period, people like property prices are never going to come back down. And then they did. Now they've obviously gone back up, but they did come back down. So at some point, I would expect this to come back down. But right now, it's clearly in a bubble, which means it's not a rational, predictable thing. You've kind of just got to let it just do its thing. Just go with it. Okay, so again, don't anticipate or expect anything from it. Just watch it and respond to what it does. Does that make sense, guys? It's really interesting. I saw this incredible, it was a clip on social media, and it was like a martial arts instructor, like this guy with a beard, and he's got this little kid, and he's trying to do this thing where he's swinging at the kid, and the kid's probably like 8 or 9, and the kid keeps doing this, and he keeps saying to him, don't anticipate, because what happens is then you're reacting before you need to. And it's amazing because he does it for about 2-3 minutes, and eventually the kid is actually not responding, and then he does. So in other words, he waits for the market to do something and then responds, which is better. So you always want to take your cues from what the market is doing and then navigate around it. Cool. And that takes practice, guys. You cannot be a perfect trader now. It's an ongoing journey. The first key level is when you get to a place where you're not losing money anymore, because you're not picking bad trades, you're not managing them badly, you're not revenge trading. Eventually your eye starts to be able to read which way the market's going, but you still have some losing trades and you still have some wobbles because emotionally and all kinds of other stuff. And then as you mature and over time, your eye gets better, you get less emotional, and then all of a sudden you reach a point where you look back and you realize you've been making money, even if it wasn't a lot. You've been making money more than you've been losing money. And then the idea occurs to you, this is actually something I can do. And that's the beauty, because that's actually the beginning of your journey. Once you get to that place, now it's just a question of you getting better and smarter and wiser and gaining more experience. And so the point of these sessions for me is to brain dump experience into your heads. Okay. To accelerate your journey. Because there are things that are obvious to us now that would not be obvious to me, the same trader version of me 10 years ago. So I feel like I've got to talk about that stuff, because if I don't point it out, you guys, you know what I mean? You know where I'm going with this. Let's have a look at silver. So one thing I like about silver is it has more upside potential. Okay. The thing I don't like about it is it's incredibly choppy. It just does not trend as well as gold. So don't trade something that isn't trending very well, because you could end up trading silver because it's got upside potential, but then just have losing trades because it goes up and down and up and down. So only trade it if it has a clear trend. I'm just saying to you that it does have that possibility to try to catch up with gold. But if it isn't trending, just stay away from it. I mean, here you can see this is a daily chart, and actually silver's been roughly in this area for, again, a year. Gold's been taken off, silver hasn't. So don't equate gold and silver. If you cannot see a correlation, don't make the assumption. In other words, just because someone says, well, silver's the next best thing to gold, therefore trade that. No, not really, if it's not performing the same way. Okay, crude oil, we've looked at. Crude oil looks nice and weak, that's cool. Now, let's run through the markets, okay? So remember this, okay? Here's the rule. There's only 2 types of market conditions, okay? Market conditions that are not trending, in other words, they're not going anywhere. They're just ranging and noisy, where there's low volume, not as many people trading them. So only 2 types of markets. Doesn't matter which thing you're looking at, what time frame, doesn't matter. It's either not moving or it's moving. And it's either moving up or it's moving down. So if we focus predominantly on only these types of markets, it's safer, it has a higher probability of making money, it's better for us. When we focus on these, it becomes much more iffy. So the first charts we really want to engage in are the ones that have nice trends, and we want to go in the same direction. That way, we're piggybacking on top of the big money. So there's no conspiracy theories or anything like that. The big money, the market makers, the market movers, they're moving the market. We see which way they're moving it, and we just piggyback on top. Okay, it's a very common sense choice. No conspiracy theories. We don't have to worry about that. So what we're going to do now is we're going to go through the global indices, and we're looking for a clear trend. Okay, I'm looking for it. If it's noisy, so even if it's like this and it's got a beautiful trend, that's not necessarily a bad thing, but it's still stuck within the range, the bigger picture range. Okay, so just got to be cautious of that. So we'll start off with the Dow. The Dow is the oldest one, 1896. Charles Dow creates it. Why? Because everything is industrial: shipping, rail, transport, metals, manufacturing, mining. The biggest companies, he can determine how well the economy is doing. Excuse me. He can determine how well the economy is doing, because if these guys are doing well, the economy is doing well. The US grows so big, they start with the next large cap companies, the S&P 500. So let's have a look here. First of all, we go to the monthly. Thank you, Sam. Guys, we have an uptrend here. How do we know this? Well, we've got price coming back into the moving averages and heading out. So on a big picture thing right now, we're still pretty much in an uptrend for the most part. I'm not really going to count this. We have come back to a level of support and resistance, but this is a very important thing. Are we going to get the answer to what's going to happen this month? No, because we actually need to see here, for example, we pull back, then we get a green candle. We pull back, we get a green candle. Here we pull back, we get a green candle. Here we get a green candle. We need the green candle. So I don't think we're going to get it this month. I don't think so. It's very unusual. It's very rare. So I think the earliest we will know if the market is recovering is when we get a green candle, which is end of May at the earliest. So guys, we cannot predict what's going on with the markets at least until the end of May. Therefore, we're in this horrible place where now we could keep going or bounce. So it makes it very, very tricky. Does that make sense, guys? Right now, also, big tip, my guys, I teach you this, under the 50-period moving average on the weekly, we're in a bear market. So we're not in a bull market anymore. We do have lower highs, lower lows, and we've just come under it. So it's rare for us to break under the 50-period and then immediately come back. We normally spend a bit of time underneath it. Here was our last bear market. This is COVID. We've just broken up. So if you compare this with like that and that, I think we're still very much, we're at the beginning or something. So I think let's just keep in mind the possibility that we're in the first month of maybe 3 or 4 months of like deciding what's going to happen. Just keep in mind that. Next up. So it makes it very choppy. The other big tip, look how small the candles are here. Look how big the candles are here. The candles get bigger during periods of volatility. How you know it's calmed down is when it goes from the big candles back to the small candles. Then you know it's calming down. So we don't have small candles. We're still big candles. We're under the 50-period moving average. So just be careful. Okay, super careful. The other thing that happens, one last bit of wisdom, is that there's lots of buy orders sitting at these key levels. So that's why when price comes down, it can suddenly bounce back up. So just be very careful. If you're shorting these markets, you've got to reduce your risk. You've got to take profits sooner. And then don't be surprised when it hits a level and bounces up. Just don't be surprised when that happens. There's lots of big money out there that's buying at these levels. Okay, so even though the market might go down, it could do this, could keep doing this, boom, and then it sort of does this, and then boom, like it could. So just be very cautious about that. Okay, S&P 500. Keeping in mind, Sam, I'm keeping an eye on the time as well, thanks. Same thing again, guys. So we're watching this. It's exactly the same analysis that I just did. S&P 500, 500 world's large cap companies, global windsock, because it's companies we know. It's like Nike, McDonald's, KFC, it's all these things. We know them. They're all around the world. So I'm not sure how we'll close at the end of the month. This is what happened in September. If that had to happen now, I'd be very concerned. I say that. It would be bullish. It would mean the market's going to try to push higher, but I don't think it's going to ultimately pick back up. I don't think it can. After this, it only went up a little bit and then it crashed. So I would be very cautious of that. I think there's a very fair chance we'll close down, and then I think we got to look at April. I think that's more likely. The UK 100. Managing to recover relatively well, but we're not safe yet. We've still got bounce off that. We'll need to see how we close at the end of the month, which is 10 days away, and if it closes much higher or if it closes lower. If it closes lower, we're going to see further downside. If it closes higher, it's going to try to push higher. Germany is one of the strongest non-US indices at the moment. Again, I'm watching that. We've still got 10 days. Guys, this could very well just close down like this. It could close like that. It could. Excuse me, but I'm not sure. That's why we need to see. We need to see what's going to happen. Guys, you know me in my Telegram group. I'll be updating you on this stuff specifically. EU is looking weaker. So when you get over time you'll learn to spot when the candle is not when you realize that if it closes like this, the next candle is probably going to keep going down because it's not a strong enough finish. Like this is bullish so far, that's really bullish. This is a little bullish, but it has to close a bit higher. Nikkei. So Nikkei is quite weak, guys. I think this one's going to stumble a bit more. HK is something to watch because I think Chinese stuff is going to do really well. I think we're seeing a shift towards from the US being the world leader. They're not the world leader anymore. They're remnants of a world leader. I think we're going to see China become the next world leader, and I think it's very ready to do that. Australia, also here breaking through resistance, testing that support level, and then China, of course, the same thing here. Not really a lot of clarity here. What you want to watch over the coming months, guys, is which markets take the biggest hit. So in other words, if the US markets, for example, take a really, really big tumble, but the UK, for example, doesn't, that will show you that the contagion, the weakness is kind of concentrated in the US. If you see it impacting all the markets, that also tells you something. It does tell you that the US has still got a very big impact on the global economy, and it's impacting everyone equally. We don't really want that because that's going to lead to a global depression. So we don't really want that. What we want to see happen is the US markets take a bit of a hit, but other markets kind of scrape by or take less of a hit. That's better for our future. Obviously, it's better for the planet's future because, yeah, we need to do that. Guys, I'm going to leave you with that. Run through the pairs, have a look at things like I still think some of these, let's have a look at some of the yen pairs. If you see something like this, guys, you can't trade this. There's no money here. Okay, it doesn't matter. It doesn't matter what the indicator is saying. It doesn't matter what the strategy is. You need a trend. And you can see the uncertainty in the markets now. When you see that, there's just uncertainty. You're living in a very weird time where there's not a lot to trade, maybe like gold and a few other things. But it's also, there's a big lesson here. The stuff you learn now is it's okay. Don't trade and lose money. If there's no trading to be done, that means you're not losing money. Okay, because you've always got to do two things. You've got to not lose money, you've got to make money. This is a period where you don't lose money. Guys, thank you very much. I'm going to let you go. I want you to enjoy the rest of the week. Trade cautiously, I think for now. Just trade cautiously because the market is just